So, hi guys. So, this is NAS100. Today I'm a bit late. I usually analyze the market by 8 a.m. Kenyan time when I want to trade the London session. I mean the London the London Open. So, but today I'm a bit late. Actually, missed a very beautiful trade, but we're just going to have a look at it. So, currently here we are in the daily time frame. We're in the daily time frame of NAS100. So during the London session, we are actually scalping. We're doing nothing more than scalping. So we're just going to put it forwards. So in the daily time frame, what you can see, we have a fair value gap here. Buy side imbalance. So this line is the midpoint. This is the midpoint of the fair value gap. So I named it 1 day fair value gap. Midpoint of the 1 day fair value gap. So any line that I draw, I usually love naming it. It's good because when you're navigating through different time frames, you can be able to clearly identify this line. What does it refer to? Which time frame does it refer to? What is it? So this one is the fair value gap, as you can see, FGV 1 day. So we're going to go to the 4 hours time frame. You can see we are selling. We are coming to this zone. But today, I don't know. Let me just check the economic calendar. Satisfactory. So the first thing to do in the morning is always to look at the calendar so that you can know what will be the drivers of the market. So today we're going to have a news at 4. At 4 we're going to have some medium impact news at 5. So yes. So we already know 4-5 the market is going to be volatile. So in the 4 hours time frame you can see that the market formed another block and now we are coming down. So this candlestick, this is what I would have scalped by 8, and I'm going to talk about it. I'm going to talk about how I would have caught this trade. This one, that candlestick, I would have scalped 20 handles from that candlestick. So let's go to the 60. That's the 1 hour mini time frame. So if you look at this, we have a gap here. This is what we call volume imbalance. This is a concept that I learned from ICT, volume imbalance. So let's go lower. Let's go to the 30 minutes time frame because you're scalping. So you're supposed to dwell in the low, in the lower time frame. So if you look at this gap, can you see this beautiful fall? I would have caught this one. Like, wow. So anytime the market opens with a gap, this gap usually acts as a draw of liquidity. Draw of liquidity basically means the price is usually attracted to it. So the price will always tend to come back to this. This always acts as a magnet. If you look carefully in a 30 minutes time frame, the market really supported this area. There is no candlestick that closed below it. Every candlestick was wicking below that, but not closing below it. So that's an indication that it's respecting the gap. So this being a bullish candlestick, I want to look at the open. So the open is look here. I want you to look at this. This is the open, high, low, close of the candlestick. So when you hover around the candlestick, you'll see the open of the candle is 19,492.3. 19,492.3. So I'm gonna change this to 3. I love being accurate with my analysis. So this one I'm gonna put the close of the candle. So the close is 1948.15. 1948.15. So I'm just going to lock it. lock it, and then I'm going to find the midpoint. It's very important to have the midpoint of a zone, a key, an area of interest, because they usually tend to respect it. You can see the 50% is 19,487.0. 19,487.0, we are accurate. So now I can delete this. So right now, I want to see whether I can buy. So if you look at this trade, now we need to determine our range. What's our trading range? We are scalping. So first of all, you can add an indicator, Session Lab. You can see this is the Asian session. So London opened, we push down to this zone. Okay. So right now, I'm looking to go long, and I'm looking to go long to this zone. Okay. So when you're scalping London open, guys, I want you to focus on the Asian high and the Asian low. You're not trading anything apart from the Asian high and the Asian low. So if you look, what's our trading range? This is our trading range. Can you see this one? So that's our trading range. Good. Now we can go to the lower time frame. So we need to annotate this. So we're going to name this. It's a 1 hour. It's in the 1 hour as well. 30 minutes volume imbalance. Let me talk about the volume balance quickly. So a volume imbalance, you identify it by, can you see the candlestick? Let me just hide this. Can you see this candlestick? You can see this candlestick. They did not overlap, so it closed wicked up. Then the other candlestick opened here. It jumped up, it opened here. This is the open of the candle. This is the close of the candle. So they did not overlap. Now look at this close. This close of the candle, then the market wicked down. So in here, the algorithm treats it as a gap. There is an inefficiency, think of price delivery here. Okay? So this area will act as a draw of liquidity. This area will be used as a reference point by the algorithm. So if you wish to learn about volume imbalances, you can just go to the ICT and look at the ICT concept, and you learn it better, because that's where I actually learned about the volume imbalance. So I'll update you guys. Let's watch how price will play around this area, and then now we can see whether we can get a long. The long will be targeting this high. This is the Asian high, but the market could pierce up. So let me bring back the indicator. So you see, we've taken the Asian low. This was the Asian low before this one. So the market has come and we've cleared it. So I'm just going to give it time and see how the price will react. The 30 minutes candlestick will end in the next 8 minutes. So we give it time Then depending on how price will react on this zone, we're going to determine whether we are going to have a trade. So okay guys, I would even want to see this low being taken out. This is the New York low. If this one is taken out, I would want to go long a bit. I would like to buy this asset. Now look at this market. It came up balanced. Can you see here? From here to here. Let me just use a rectangle to clearly visualize it. Can you see that? That's a fair value gap. So fair value gap. How do you identify fair value gaps? It's like we have three candlesticks. One, two, three. The middle one is always larger than the other two that surrounds it. Now, can you see the body? These wicks do not cross each other. Look at this one. Can you see the wick of this and this one have closed? The wick of this one and this one have closed. So basically, I'm going to create a good video about fair value gaps. I'll update you in a few minutes. Let the price play around, and then you're going to see whether you're going to get a trade. So this is live trading. This is live trading. For those who know, I'm doing live trading. Like as I analyze my thought process, that's what I'm recording, that's what I'm documenting, so that developing traders can be able to like see what we do as professional traders. So look at this. This is the volume imbalance. At the moment, it hasn't been respected by the 30 minutes time frame. So we can see during the open, when the market opened, even the Asian open. So this is at 1 p.m. So the market closed there. So it opened. Like this is on Monday. You can look down. Look here. Here. I want you to put your focus on this area, this scale. It will show you the dates. So look at this. This candlestick is on Monday, 24th June. Okay? This is for 25th Tuesday, 24th June. So I mean 25th June on Tuesday. So this is tomorrow. This is today, sorry. This is yesterday. So the market opened with a gap. This gap has been respected, right? 1, 2, 3, 4, 5, 6, 7. Okay, this one broke below it. For now, I need to take a buy. I would like to see this low taken out. So this is the New York. Can you see this one? Personally, I don't put this indicator all the time. I'm just putting it for educational purposes. Now look, this is the New York. Let me layer it again so that you can clearly see. So this is New York, sorry for that. This is New York session. Let me just change to that one. Now you can see, this is the New York session. Can you see? The yellow is the New York, the blue is the London, the red is the Asian. So this low was formed during the New York session yesterday. Okay, so I want this low to be taken out by the market. If the low is taken out, I'll look for a buy. If it's not taken out, then I need to see a proper change of character so that I can take the buy to this area, to this zone. Okay, we have a fair value gap here, but I'm not interested in it. So for me, I'm only interested in a trade that will come from here to here. If it gives me 1 into 2 risk to reward, that's all I want. So let's go to the lower time frame. So look at this low. This low has been taken out, okay? But this one is yet to be taken. This one has been taken out. Look. Can you see this low? It has been taken out. This one is yet to be taken out. But the market seems to give us a proper change of character. So can you see how the price action is beautiful? just forming lower lows and lower highs, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now we broke this one. Can you see this high? It formed this low. Okay, so we broke it. So for me, I think I'm ready to take a buy. I'm gonna take a buy on this trade. Let me just connect to my paper trading account. The same trade is gonna be put in my live account, but for educational purposes, I only use paper trading because this is what I usually advise students to use. So I'm gonna check 10 contracts. I'm gonna buy with 10. So yes. So this is the Asian high. So I'm expecting the market to clear the Asian high and come to this imbalance. So that's the trade I'm only interested in. The market could come to this zone. So if you need to remove I'm going to get off the larger part of my trade here. So let me just pyramid my position. I'm gonna add a position. Right. I have 20 contracts, so I'm going to remove 15 contracts here. You see, 15 contracts off. So we're going to monitor the trade on the 5 minutes time frame. So I can remove all these distractions. I'm going to remove the indicator for now. Yeah, and I'm going to reduce the opacity of this so that we can clearly see the price. Sorry guys, I was putting the trade on my live accounts, the same trade. So I'm going to update you on the progress of the trade. So I'm going to let me remove this. Let me now clear all these lines that are unnecessary and just leave the main. So this is the gap, okay? So if we break through the gap, if we break through the gap, and then the market comes to this zone, I don't mind seeing. I would like to see the market maybe probably finding some level of support, then you go up, okay? So I wouldn't mind to see that. So this is our trading range. This is our trading range. Can you see? So this high formed a new low. So this is our trading range. Right now we are at the discount. So this is the midpoint. If you want to get the midpoint, just use your Fibonacci. You'll draw and then you'll get the midpoint of your range. So your midpoint is around here. That's your midpoint, okay? So, but we don't need it for now. I just want us to have the chart as plain as possible. So, okay, I'm going to remove this. And I'm going to reduce this to 1 pixel. So, I'm just going to add another position in my live account. So, guys, so Forex is a skill. It's a skill that anyone can learn. But you need to be willing to learn, okay? You need to be willing to learn, guys. Because it's not an easy endeavor. But again, once you understand it, let me tell you, you can make so much money from it. This 15 minutes fair value gap is our profit target. It is at the premium of our range. So you can see we are targeting the low of the fair value gap, which I expect to be hit when the market takes out the weekend high. Okay. I'm not happy with this blue, so let me just change it to another color. Don't worry guys, I enjoy playing around with colors when I'm trading. Look at how we are pumping up to this fair value gap. So look at how we are pumping up. So the market could potentially decide to come lower from this zone. So we need to be very careful. The market can potentially decide to come lower from this area. So once we tap here, we might see some reaction back to this daily opening up. I mean this opening up, yeah. So guys, I was telling you Forex is a skill that each and every one of you can learn. But you need to be willing to put in the work. You need to be willing to put in the effort. People go to campus to study for like 4 years for a very heavy career, and you say they put their time into it. They put their time into doing cuts. They put their time into doing exams. They put their time into reading, attending practical classes, doing the projects. Guys, 4 years of your life for you to become a professional in a certain field or for you to get a certificate. So when you come to the financial market, when you come to forex exchange, you need to treat it the same. You know, forex is cannot be taught in campuses. I don't know the reason as to why, but you will never find a campus teaching forex trading. You usually find traders teaching their fellow traders. You will find traders creating their own courses. But now there is lack of a systematic approach to which you follow for you to be successful or for you to get the certificate. Like the normal people, how they usually go to the universities, they do the exams, and these papers, once they pass the exams, they are rewarded with a certificate. So you chase that certificate for you to be qualified and be termed legally as maybe this professional person, maybe a doctor, maybe a civil engineer, maybe a computer science student. So I mean a computer science, yeah, or a programmer. So but in forex, you're fully in control of your time, you're fully in control of everything. So this career buys you freedom, but there is a cost you need to be dedicated. It's for the people who are willing to put in the effort. It's for the people who are willing to put in the work. You know. So, guys, when you come into forex trading, you need to give yourself time. You need to take it slow. You need to practice on the demo. Personally, I have trades in my live account, but I'm showing you the trades that I'm putting in the demo. First of all, you need to do this. You need to be able to trade in the demo account before you even start trading live ones. So, like, if this fair value gap is pierced, if the market just goes through it, I would like to say that it will reinforce our sales, our trade, but we will receive some reaction from it, and if the market respects this fair value gap, we need to be careful because the market can choose to come, find some level of support here, or probably even drop down and continue to drop down. But our target is here, so we stick on our analysis. So, guys, you need to be willing, guys, to put effort. You need to study, give yourself time, trade in the demo account, and you're going to come out successful, guys. Like, this is Forex S Club. You can follow us on IG and YouTube. For now, I'm going to open new social media accounts. I'm going to start posting on the other social media accounts. So you can follow me, guys. I'll be able to tell you more. I'll be able to train you. Yeah, we can walk through. You can just DM me on Instagram, and then we can be able to engage on a conversation, so that yeah, we can engage on a conversation so that I can be able to help you grow. But you first need to be dedicated, guys. Yeah. So you see, like, this could be live capital. This could be live capital. I'm actually trading live capital. Currently, I'm using pro farms. I'm trading funded accounts, which you need to have the skill for you to pass, because it has strict rules that you have to follow. If you don't follow the rules, you're going to fail and you'll have to restart again. So that makes it harder for people to pass. So if you look at this trade, guys, this is such a beautiful trade. I was able to call the buy as the market is selling. How can you do that? Is it possible? Yes, anyone can learn forex, guys. Anyone can learn forex. Anyone, like, no matter who you are, if you are an 18-year-old child can be able to learn forex. A 15-year-old child, when taught properly, they can learn forex. It's a skill that you acquire, but you need to be willing to work on it. So we have the skill aspect of forex and we have the psychological aspect of forex. Majority of traders fail not because of anything, but they have not worked on the psychological aspect of forex, guys. So the trade is moving up beautifully. So we're hoping to get to our profit target. Then we can remove 15 contracts. Yes, we can remove 15 contracts from it. So yeah. So I think I can now put my stop loss here. Now I'm so happy. So in the next 8 minutes, this candlestick will close. So I want to see it pierce through and continue up. I don't want to see some form of resistance from this zone. So yeah. So guys, um, you can look. You see, can you see this one? This we're having some resistance over there, but we do penetrate. I think we should just easily come to this zone. I expect the market to rally up to this zone. I wouldn't want to see it come down. So I just want to come to this zone. So can you see this fair value gap? This one. That one. That fair value gap. This fair value gap is this market came wicked into this fair value gap, then dropped. So I expect it to rally up. I expect it to not act as resistance. I don't expect it to hold the price. So I expect the price to easily penetrate through it to our profit target. So let's just patiently wait. So this is live trading, guys. I'm trading live. As you can see, the market is running live. There is no playback. I'm not even using the paid version of TradingView. I'm using the unpaid version of TradingView. So this is what we call trading like a professional. Right now, you can easily bring your TP to this zone, but I'm not this person who likes to move on my. I mean, you can move your stop loss to this area, but I'm not this person who likes to trade stop losses. Because when I enter a trade, I usually accept my risk. I'm always ready to take the loss. Yeah, so you can see we're not having a lot of resistance here. We are penetrating, we are passing. So let's just be patient enough for the market to come to a first take profit area. I remove the 15, and then the rest I can let it to run to the moon. But I can even choose to just close all the position from this area because it's a good trade. This is a very beautiful trade. Everybody can learn to trade. Nobody should. Let me advise you guys. Buying signal is not wrong, but it's not a sustainable way to trade forex. You need to be your own signal generator. You need to be your own signal generator. You need to be able to identify setups and comfortably take them as an individual. You don't need to rely on someone to analyze the market for you and give you like buy here and sell here. You can be a professional in forex. Yourself, you can learn how to trade, guys. For me, I did a totally different course. I did a course related to lands. Then in my campus when I was in second year, I decided to do marketing, and I'm a very good digital marketer. I know how to do like the technical aspect of marketing. I don't want to go depth into it because it's very wide, but I'm a very good marketer. I've worked with a five-star hotel, guys. I've been the digital marketing specialist alone of a five-star hotel with a golf club. I decided to put it aside and focus on forex, guys. This is not because I'm stupid. This is because I know the capability of this. I'm not advising you to follow my method. I'm not advising you to leave your job. Guys, you will suffer. I'm not proclaiming you're going to suffer, but you might. My situation, my age would allow me to make such mistakes. Because again, I was even being pushed by another five-star hotel. So I was booming in my industry. And I'm still a proper digital marketer, guys. But I've chosen forex trading, guys. So I think we're having some resistance. So let's go and investigate where the price is going here. You can see we took out this high. We took out this high. So the lower time frame, we took out this high. Can you see this fair value gap? Let's see whether it has been respected. This one. No, it has not been respected. So let's look at it on the 1 minute. This is our profit target. I want you to see it. 15 contracts off. This is the fair value gap. So let's manage the trade on the 1 minute time frame. You can see we are retracing back. That I expect this to hold the price. Expect this fair value gap to hold the price up. I don't want to see this fair value gap not respected. I want to see it fully respected. Being respected, the price can trade in this area but not close below it. That's what I mean by being respected. The price can trade in here. It can wick down. Wick down is like, you see this wick, this is a wick. It can wick down, but it should not close below it. If it closes below it, then I'll be ready to close the trade. I'll be ready to collapse the trade. We don't have to reach here, but it's good when we reach to our profit target. I don't like tampering with trades, so So let's manage it on the 15-minute time frame. It's easier. The 1 minute time frame is very noisy. So I don't want to see this fair value gap being respected. I want the price to close above it. Therefore, let's just manage it from the 15. In the next 4 minutes, I would like to see this candlestick closing above it. If not, the next candlestick should close above it. But it should not start to come down because there is a possibility we can reverse to the lower side from this area. What I want to see is this market coming to this one. That's what I want to see. Can you see this candlestick? It closed below, but picked up, never closed above. So it respected it, and now it wants to go down. For now, I don't want to see this waking up and not closing above it. I want to see this closing above it. If this candle close above it, it will add some. It will spice up our trade. It will add a confirmation to our trade. Yeah. Beautiful. Now we have already bypassed the midpoint of our range. When the trade comes to the midpoint of our range and says to go back, that's valid. It's very valid. But I want to see it coming to the premium area. This is the discounted area. This is the premium area. So above the 50%, midpoint of this and this. This is our trading range. From here to here, this is the trading range. Let me just put it that one. This is our trading range from up to down. Let's patiently wait, guys. So I recommend guys to spend time on the charts. It's one of the most boring processes. So as I'm recording this video to educate you guys, this is acting as my trading journal because I'm making the decisions as I'm training you guys, I'm executing it on my live trading account. So this is like my trading journal. So first of all, guys, let me tell you something. In forex, forex is all about discipline. Discipline is something that you must have as a trader for you to be consistently profitable. Guys, you need to have discipline. What do I mean by discipline? Being able to follow your rules. Being able to follow your rules. Being able to follow a systematic way, not violating your rule. You can go and listen to a book called Disciplined Traders by Mark Douglas. You can even go and listen to like Trading in the Zone. You'll understand what kind of a mindset your trader have. For like, you'll understand like how to think like a trader. Because as a trader, you operate differently. You don't operate like the way the normal people operate. Guys, you don't. So give the trade time, guys. I'll come back to update you. But those who are comfortable with the profits, you can close. You can close like just a bit, like half of the position, not the major part. You can just close half here or a quarter. But I want to see the trade come to this area. Don't mind if you hear some noise. There is a protest. There's some protest outside. So the youths in our country, the Gen Z, me being part of them, are rejecting the finance bill of our country, Kenya, and I support it. Yeah, so that's why people are protesting out here. So once I'm done recording this video, I'm going to join them because we need a better country. Yeah, so guys, I'm going to remove all my positions out here. I'm going to remove all of it out here. I think I'm satisfied. Yeah, I need to go like protest. I need to go join my fellow youth. So I'm going to. So that's the trade. That's a good trade. That's very beautiful. Very beautiful. So I'm going to put my TP to that area. So we're targeting 1,224. I'm always doing multi-time frame analysis. I'm always moving from one time frame to another. Like with that's how I trade. With time, you guys will come up with your own systems. You'll be able to know what works better for you. You'll be able to choose on how to navigate, what time frames to use. Personally, I'm good at 15, 5, 3, and 1. I really love managing my trade using this time frame. So any time like I see something like a sort of a pullback, a reversal, so I'm usually like playing around these small time frames. I'm usually just looking at the smaller time frames to be able to get insight. Now, once you see like the small, like 2 or 3 time frames are like speaking the same language, meaning like there is the same confluence, it solidifies your edge, it solidifies your bias. So if I'm buying and then now the 5 minutes, 3 minutes gets to tell me that it's a buy signal. Yeah, let me just remove this profit because I want to manually close the trade. Yes, I want to manually close the trade. So what I'm saying is when you see like 1, 2, 3 time frames having confluences, like it solidifies everything. Secondly, when you're putting your target, when you're trading, when you're putting your target, ensure you put more emphasis on the higher time frame. For example, in this trade, this is a 15 minutes fair value gap. I love targeting the 15 minutes fair value gap, key area of interest. So in this trade, I'm targeting that. Look, 30 minutes. When I'm managing my trade, it's 5 minutes, 3 minutes, 1 minute. Targeting this. So because I'm scalping, I'm just looking for like a few handles and I'm out of the market. So I put more emphasis. Your targets, your bias should be purely oriented in the direction of the higher time frame. Now, when you're managing the trade, you can manage it in the lower time frame because now, like for example, look at this consolidation. I can go to the 3 minutes time frame to see what is clearly happening. Okay, so what we can see, the market took out this high. So if the market was to reverse, I expected a rally down. But you see, the market is formed some level of support here. Here, now when you go to the 1 minute time frame, you look what is the market doing. You can see there is a fair value gap here. Okay, so this one is not very accurate, but you can see there is a fair value gap here was respected. The market came again down, came up. So with time transaction, there is something you're going to learn. Like if you give it like in the next few minutes, 5 to 10, there is a pattern that will be formed, or there is something the candlestick are going to communicate to you, and they're going to tell you what the market wants to do in the lower time frame. So let's come to the 3 minutes time frame. Look at the 3 minutes time frame. What does it show? The market wicked down. Okay, there is a fair value gap here. The market wicked down. It wicked down again. It wicked down again. It's forming wicks. Okay, so it's giving you like the analogy that the market wants to buy. Okay, it's giving you, it's tell like there is always a setup. There is always something that you can learn at the lower on the using the lower time frame as compared to the higher time frame. The higher time frame for the buyers, you should manage your trade using the lower time frame. Now it's easy for the lower time frame to mislead you because it has a lot of noise as compared to the higher time frame. So that's why when you're looking at the lower time frame, like for example here, there is no clear indication. Like let's say the 1 minute time frame. Look at this fair value gap. So I expected this fair value gap to be respected, but why didn't I close my trade? And you see it closed below it. I did not close the trade simply because you have to give the lower time frame benefit of doubt, because the lower time frame might have some sort of distortion. So we're going up, we're going up, we're going up, we're going up, guys, we're going up, we're going up. So if you want to trade like me, just go forex underscore AC underscore club. You can talk to me. We can just talk and organize and see how you can be able to learn from me, learn from my trades. You can even have personal lessons. Like there is so many concepts that I've applied here that just running into my brain that I can't be able to talk. So guys, sorry, I got disconnected. You can see we penetrated through our area of interest. Now I'm going to remove 5 contracts. I'm going to remove 15 contracts, sorry. So let's just stick to the previous. I just want to see a push up a bit. I can close it. I was slow. I was recording, like I got disconnected from the internet. Now I can close. Good. Now I can put my stop loss here. Now I let the trade to play out. So I can actually bring it back to this area. I'm not willing to give it too much room. So this is a stop loss. So the market will stop me out. If it decides to go up, then that's okay. If it comes to this high, I'll just collapse the trade. So put my TP here. Can you see my take profit? I'm putting it at the higher end of the fair value gap. So if it decides to come down, stop me out, I don't now pay anymore because the larger part of my position has already been removed. So guys, this is how you trade professionally. Forex S Club. This is not anything else rather than live trading, live execution. I'm literally showing you what I do as I'm making money. Like this is exactly what I do to make my money. This is exactly what I do when I'm trading my live account. Same are trades that I'm putting on this are the same trades that I'm putting on my live account. The lot size might be different simply because this paper trading account is slightly bigger, but my live account I'm trading a funded account, which I've been able to put the same exact trades as I'm demonstrating to you guys here. So I think I'll just watch and wait to see what the market will do. So let's go to the lower time frame. And you see this is so beautiful. We pierced the lower, can you see we pierced the lower zone of this? We pierced the lower part of this fair value gap. And I know this fair value gap is going to be filled. So if you trade higher above this high, let me just do this. If you trade to this, the midpoint of this, I'll remove 2 more positions. If you trade above this 50% line, this one, I will remove. So I retrade to that area. I'm going to remove like three positions actually, not two positions. So today's video will be very long. It will be more than an hour. So yeah, it will be more than an hour. The market is very slow, guys. The market is very slow, but you don't need to be patient. When you're trading, you need to be patient. Yeah, when you're trading, you need to be patient. Yeah, so today I'm quite in a hurry because I need to go. I need to go out. So I'm actually going to put all to get out all my position. I'm going to get out all my position like at this green line. So once the market, I want the market will take me out when it hits this area, all the position. So I'm not looking to scale down these five contracts. I'm just looking to just be out of the market once the market clears this. Yeah, so let's just patiently wait and see what the market will do. And I expect the market to just go up and clear me out, stop me out, get me out of the market. So guys, these decisions that you make in the trade, that's what matters. That's what matters as a trader. And you see the decision that you make when you're in the trade, that's the most important thing in forex. Some people do set and forget, which is a good strategy. Like once you set your trade, you forget to just go and do your things and you let the trade play out. But for me, I'm this person who has to monitor the trade. I need to make decision as the trade is running, what the market is doing. I have to watch. I need to read the charts, get information from the charts. So yeah, so can you see where we are? We're going to pierce it. Let me just delete the triangle. Let me delete the nini. I want to delete the nini. I want to delete the drawing. Yeah, so deleted it. So I just want to see the so that I can be able to see the price being taken out. So in the 3 minutes time frame, now we zoomed to that area. I've zoomed to that area. So so that you can clearly see what the price is. Yeah. Beautiful. Beautiful. Now, yes, thank you for being with me. That was a beautiful trade. That's what I wanted to see. The market taking out this high. The market meaning reaching for this high value gap. So right now I'm done. I'm done. I'm done for today. Yes, I'm done for today. So that was a beautiful session. That was a beautiful trade. So I'm just gonna plot it out. So those are the executions. Look at how beautiful. We took two trades here. I took 10, and then 10. That's so beautiful. That's so beautiful. That's so beautiful. So I'm just going to delete this. Yeah, so guys, that was one of the most beautiful trade we've ever taken. So let's meet tomorrow, same time. Kindly follow, sorry, kindly follow Forex AC Club. Forex AC Club is on IG, so you can DM me. That's where you can DM me. Just go to my IG Forex underscore it's AC underscore club. Go there and follow me. Feel free to DM me. Feel free to ask me any question. I'll answer. So anything that you want, probably some personal lessons or personal mentorship or walkthrough or introduction to the financial markets, anything that you want, just go there, DM me, and we'll have a conversation. Okay? Thank you, guys. Meanwhile, you can also send me an email. No, actually, I'm going to create an email, and then I'm going to put it at the description. At the description, so you can even use the email to contact me. So thank you, guys.